changed a few things up with the live. So I don't know how it's gonna work. We'll find out.
Okay.
That's cool. Let's just kind of play around.
Yeah.
Okay.
We're always testing something or another when we have every single live.
Yeah.
So things do get better over time. It's just it might not always be perfect the first time.
It's okay. I mean, it's actually very interesting to see how you guys do it. So it's something for me to take note of.
Yeah. Well, we can definitely have a whole conversation
Yeah,
in the future about this if
of
you're
course.
interested. Anyway, how long have you actually been like learning investments and whatnot?
Honestly, it's been 2 years now. So I actually started in 2018.
Yeah.
I started with just Forex. I wanted to make money in a very short period of time, something that takes like very little capital for me to start with. But it's not true. It's not short time though. It was just something that I was thinking about, right? So I actually learned Forex trading for about a year.
Yeah.
But it's through free courses. One of the courses that I took was from Baby Pip's School of Pipsology, if you've heard of it.
What a name! Wait,
Yes,
how do you
yes.
spell that?
You
How do you
got
spell that?
School of Pipsology, Baby Pips.
P-I-P-S?
Yes, Baby Pips. It's honestly, despite the name, it's such an amazing free course that you can get, and it's one of the famous ones. I think. But yeah, it's like super extensive. It's like a real course, and it took me forever to finish it because, yeah, I can see Reggie, you're still. You know
From
what?
a
If you were to,
from a branding perspective, I love them. Baby Pips, right? And it's really cute. You go to the website, and like a lot of like cute little icons. They're like,
exactly,
oh
Oh man, now I
exactly.
feel like I need to pull it up for people to see.
Yes,
yeah,
please.
man, yeah,
Yes.
show them at babypips.com. So cute. It's
Hold
like
on.
the first thing you go in, you see all these charts, and like looks very technical. But then you scroll down, and you see all these cute little cartoons and bits, and all they all come in. So cute.
Yes,
All right.
but
Oh,
but
this is the
it's such an amazing platform where everything is just in one place. So it's like really amazing. And if you were to actually take the course, it makes it super funny as well. Some of the things, like for me, I don't have any financial background, so I'm coming from a HR background. So when I go to Baby Pips and see all these charts with all these candlesticks and all this weird terminology, so they made it super funny and super fun to learn. So I would definitely recommend.
I
nice.
think you need to scroll down to the featured contributors. There's like
Alright.
Cyclopip there,
Yes,
and there's
they've got so
Pixel
many.
Big pimpin'.
I love them. Damn, we
It's
must
amazing.
contact them. We must talk to them, right?
Yes,
Let us reach out to these guys. Oh my goodness,
definitely.
so cute.
So hold on. So you're saying that they actually offer a whole free course around?
Yes, a whole free course. So if you were to look at,
Really?
I don't know if I can share my screen, but it's fine. If
You can.
not too sure how to do
It's okay.
that.
You just tell us what to do. Yes.
Okay. I think you may need to sign up, but if you were to look at the Forex courses, there's like, not too sure if you can. Jenny,
Education.
there you go. How to trade Forex. Basically, School of Pipsology has like kindergarten stages and preschool, university, undergraduate. So it's actually
Wow.
pretty interesting. They made you feel like you're in a real school, okay? And it took me a year to finish all this course.
That's crazy. And all this is free.
It's damn
These are all
cool.
free.
I just find
Yes.
it hard to take them
It's free.
seriously because they're called the School of Pipsology. But I think it really helps because that's the idea, right? The people that are very professional, they speak this whole professional lingo, they have this very professional vibe, and they are very far away from everyone on the streets. But
Yes.
you have platforms like this that make it palatable and fun and approachable and engaging, right? So Wow, thanks for sharing, man. School of
No problem.
Pixology. Thank you,
Yep.
thank you. Yeah, we're
They've
definitely
got
gonna.
quizzes, they've got all these things, assignments. Well, just quizzes basically, no assignments.
Cool,
Yeah,
cool
but it's
stuff.
amazing.
Amazing.
And
That
it's
was a
super
great
free.
share. That's great
Yeah.
share. Yeah, we're definitely Chung. We must contact them. Yeah, School of Pixology.
Yes, yes,
Yeah,
please make it happen.
yeah. Let's go and talk to them. Yeah, cool stuff. Thanks for sharing. Nice.
No
Okay, so
problem.
so after you went through that course, like what happened for you?
So for me, the hardest thing is to actually get started. It's easy to read and all these things. Maybe it took me a year or so because I'm not doing it like full time, right? I'm just doing it part time. So I would go through it after working hours or during the weekends. But because it's free, sometimes you don't have the obligation to actually do it. You'll be like, it's okay. It's not gonna run. It's gonna be there anyway. So the discipline is hard, and at the same time, right after I've done the course, I wanted to open up a demo account
Mhm.
and also a real account because I think that I'm ready. But by then, I haven't even graduated yet from the School of Pipsology. But I really just wanted to start, because
Yeah,
it took me forever. But it's really hard for me because I didn't know which broker to pick. But the School of Pipsology had a very interesting recommendation. So at the same time, I was also asking some friends as well on the recommended broker, and then I started to open a demo account. I started trading, and I also started to open up a real account, put some money in it, started trading as well, but it didn't go the way that I wanted it to. Although
Mhm.
theory wise, it's super easy to understand, but theory versus the real market, it's two totally different things. So what I wanted next is to find a mentor and also a community that could, support me in my trading journey. So just this year, in January, I stumbled upon one of the online course, which was quite it wasn't as expensive as I thought it'll be because the guru, the seafood that I wanted to learn from, his cost was a couple of thousand ringgit. So he has his apprentice, and his apprentice is only getting started to share all this knowledge. So he was only selling his course for, if I'm not mistaken, about 300 ringgit for 8 days.
Wow. Okay.
8 days course for only 300 ringgit. So I'm like, okay, I need a mentor, I need a community. So I signed up. And after 8 days, started doing all the strategies that I learned. But still, I didn't make so much money because, in trading and also in investment, there's so much emotion that is involved because you're actually trading, real money. So I actually made some loss.
Mm.
Of course, I mean, we have to make some loss, to actually learn. So I made some losses, and I started to. The main thing for me is to actually control my emotion, because I know that, I don't know about you guys, but at least for me, when I trade forex, I get super excited when I see, oh, the price is going up as per what I've expected, and so I would, jump in and straight away trade. But that's exactly not the way you should do it. You should actually plan, and then plan your entry when you want to enter, and put a stop loss, plan your profit, how much. But that didn't happen, at least for the first month after I have done the course. So it took me a while as well. And after 4 months, last month was actually my best month. I actually
Ah,
profited, yeah, for 25% out of forex. So that was a pretty good month. I didn't even realize until a couple of days ago. So I posted, and yeah, wanted to also share with other people this journey.
Awesome.
cool
Thanks so
stuff.
much. So I actually wanted to dig in a bit deeper on a few different
Sure.
things that you mentioned, right? So one of the things that caught my ear was you first went through all of this like free stuff, right? School of
Yes.
Pipology. I think that's what it's called. And then after you finish that, that's when you actually started saying, you know what, I'm willing to, like, I need a mentor, right?
Yeah.
Can you, for those people who are like watching or whatnot, or either live or in the future, what is the purpose of a mentor? Like, what were you really hoping to get out of having a mentor?
So the first thing that I wanted is actually a guidance from someone who has more experience than I am, and I wanted to like mirror his trading strategy and how he does it. So that's one thing. The other thing is to gain some confidence, because I know from the first time that I started, I actually lost so much trading opportunities because I didn't have the confidence in my own analysis. So that's like really bad. But it's not that I needed like an external validation to validate my analysis. It's just that I wanted to have like such it's like a someone who is more experienced, and when you ask this person, hey, market is going up, maybe I should go long, and he would be having the same analysis as well, that gives me kind of confidence in my own analysis. But obviously it took me a while, and also having a community really helps because everyone would be posting their analysis and their opinions, and you can see and learn from other people, not just success analysis, but also the not so success analysis, because everyone's analysis is different. Although the theory says the same thing, if you see this pattern, it means that the price will go up. But because market is it's so uncertain, right? Especially now with the coronavirus and with the global recession, we honestly can't just rely on technical analysis. We also need to rely on fundamental analysis. And when I first started, I only relied on technical analysis, which means just looking at a chart and then do my analysis. I didn't even bother to watch the news or get to know what's going on with the world. But my mentor would keep on posting all these things. Hey, this week NFP news will be coming out from the US, for example. Hey, this week US oil is going down. So the correlation between all these things, like gold and the global oil, really makes a huge difference. So that's the main two things.
Nice. Yes, and I think that's one of my huge values as well, right? Like, there are people out there in whatever you're doing who has done it before or has done something similar, right? So to seek out their wisdom, to help them, like, essentially walk you through their thought process, so that you can essentially absorb all of these lessons that they're learning and fast track yourself. Like, that's so beneficial. That being said, though, why did you decide to find a mentor after you went through like a year of like doing it yourself?
Because after a year, doesn't matter how much I study, and it doesn't matter how much I practice, but I couldn't see any results. And I wanted to have someone to tell me that, hey, I'm doing okay. You just have to trust yourself. I think it's human nature as well. Just to have someone more experienced to tell you, hey, it's going to be okay. You're doing great. You're doing the right thing. But the reason why I waited like a year to find a mentor is because I was also, I wasn't very sure about Forex. And I feel like it's such a tough topic. And it's super tough. If you were to study Forex, it's not that easy. And coming from a non-financial background, it's super hard for me because I didn't understand a thing. But School of Pipsology was really helpful in making sure that I cover all of the bases. Sorry, it's like super noisy here. I have like my auntie here, my mom here, like shouting at each other. So I apologize for that.
It's cool. It's awesome. And yeah, I want to point out about the coach kind of that part, right? So I fully agree what you try to do, right? Which is to just scour the net, find whatever resources you can do. And in that process, you validate yourself, right? So you validate yourself to kind of confirm that, okay, this is what I want, right? And after you validate yourself, then you invest more into it, right? Which is what I always tell people. There are tons of free resources in the market. There are tons of books in the library. Go and pick up something to validate yourself. That, okay, this is what I want. And then you move into the step 2, right? Which is to find a community, find a coach, because that is important. We cannot discount the value of a coach, right? I think there is great value in having coaches. The challenge is always, who to use, which industry to go into, and all these require validation, right? So kudos to what you do, exactly kind of what I talk about. So yeah, awesome. Yeah, man, awesome. School of Mixology.
Yeah.
I also just want to echo like the idea of for you, the way I hear your story, Nick, is you went through learning the foundations, so you kind of, so after that, once you kind of know the foundations, or at least like the what do you call it, the technicals of the technical know-how, then you actually start looking for a mentor, right? And a mentor that can that speaks to the same way that you've learned, so that you know that this person is sometimes, has a similar thought process as what you're trying to ultimately achieve, right? And the second thing there is, like I listened to your whole thing about like, spending 300 more as I'm spending 300 not really to learn, but to get exposure to a community, to get exposure to a coach. And I'm not trying to just use it to buy myself a course and then hope to do well for myself afterwards, right? And that's, I think, something that a lot of people also need to be aware that that's like subtle nuance.
Yeah, you're right. Definitely.
Yeah. So we've talked about how you started investing. So where did the whole other trading part come in? Or sorry, we started talking about your trading, and where did this investing side come in?
Okay. So I just mainly trade Forex, but the investment part comes in a different form. So like for us here in Malaysia, Reggie, you're Malaysian, right?
Okay,
Right.
I am staying in Malaysia.
Oh, really?
I'm like pseudo Malaysian, but yeah, I'm Singaporean.
I see.
But
Okay.
yeah, but it's cool. Like I love Malaysia. I love the food. No discussion. Nasi lemak is from Malaysia. Okay, full stop. Anyway,
Okay, let's not go into that discussion.
yeah, let's not go there. Let's not go there. But yes, yeah, continue to share.
Okay. Well, here in Malaysia, the investment opportunities are very limited. If we were to ask like a normal Malaysian, right, they would probably tell you that the investment opportunities here are just limited to employee provident fund, which is our mandatory retirement contribution. That's one thing. Tabung Haji for Muslims is where you would open an account to go for Hajj, but at the same time, you can also put your money in so that every single year you'll get some kind of dividend. And also we have this thing called ASB. It's also for Malaysians where you basically just put your money. At the same time, there's also ASB financing, which means you borrow a sum of amount from the bank. Example, 50,000 ringgit up to 200,000 ringgit for a period of time, maybe about 20 to 30 years, and then you just pay, premium every single month, so that you can have more like bonuses and dividend when they declare it every single year. And then we have unit trust as well. I don't know if you guys are familiar with unit trust. It's like super famous here from the banks. Everyone offers unit trust, but that's basically it. Other than that, that I have found, because I didn't want to just invest in all these things because these are norm, right? So I wanted to find something else. So I did a lot of reading as well. So what I found was a couple of things. One, as you probably may know, we have Stashaway. So that's one thing. And then we have peer-to-peer funding, which is called funding societies, where people can you're basically a loan shark, basically, right? Peer-to-peer funding. You loan
Yes,
some money
legalized loan
to
sharks.
yeah,
Yeah.
you loan your money to small businesses, and then they basically uh, pay you back with a little bit of interest depending on how much you investing.
Quite a
And
bit of
then
interest, actually, quite a bit.
yes,
Yeah, because okay, I think I need to add in a little bit here. It's that
yeah, sure, of
a lot of
course.
these companies that are on funding societies or like or this kind of funding platforms, P2P,
Yep,
many of them do not meet the criteria to get like proper bank loans.
you're right.
Right, so the banks, essentially the banks reject them for whatever reason
Yes.
that the banks have, right? Most of the reasons is because they don't have enough asset backing, they
Mm-hmm.
not are not long enough in the business, there is no kind of tax to report to support that, these people are actually making money and can sustain to make money, right? So they don't have enough track record, they don't have enough assets to go to the bank to say that we want to take a loan. So then there is a hole in between, right? And then all these kind of funding platforms then come in to repackage these loans, and sell it to all these retail investors, to whoever that wants to kind of take on that risk, right? So I haven't talked a lot about that. We'll talk about that as we go along. But yeah, I'm not a big proponent of it, because to me, if the banks don't want, right, then retail investors coming in, for someone that knows nothing, it's quite challenging, right?
True.
Yes.
True, you're right. You're right.
Mm.
That's why I did like a whole lot of reading about that before putting some money into it. Because for me, um, my goal is that don't invest in the things that you don't understand about. So that's why I've been reading and do a lot of research before actually putting money in it. And well, besides that, I also I went to a course actually. It's a value investing course, option trading. Uh, Paid a whole lot of money only to know that I need 2,000 US dollar to start. So it's like I already paid so much money to go for the course. I don't have 2,000 US dollar to
Yeah, you paid.
start right away.
Yeah, you paid about $2,000 already, right? And
Yes,
that could
yes,
have been your
definitely.
starting, right?
You're right.
Exactly.
You're right.
Yes, yes.
That's why from then, I think that was like a couple of years ago, maybe about three years ago. I was really excited about it. It's a very good cause. It's just that it's a little bit pricey, at least for me, for a person who wanted to start something. Um, yeah, uh, that's basically about it. And also, I was actually a unit trust consultant for like 2 years. I just wanted to understand how the unit trust works. What does it take to to invest in all these funds? What are the funds that are good, and so on. But eventually, I wanted to do it myself, so I started to open up a couple of platforms, such as Fund Supermart, to invest in unit trusts. And then I also opened a CDS account with Rakuten for stock investment. I also have some money in funding societies, but these are mainly the platforms that I am actually active in. Value investing, not yet.
Isn't Rakuten like a Japanese shopping platform?
Yes, yes,
Okay, so they have like
yes.
whole
You're right.
brokerage thing going on
You're
also.
right. You're right. And it's the
Ah,
most. It's one of the best platform for stock investment because of the fee. It's one of the lowest compared to other banks. That's why if you would want to invest in Malaysian stocks, I would recommend Rakuten. At the same time, I also wanted to share this free platform. I'm only looking at free platforms, cheap platforms to get
I
to
love it.
get
I love it. I'm
started.
so excited. Yes, tell me about it. Woo!
So there's this one platform, if you've heard about it, it's called Trading View.
Trading. Yeah, I heard about it.
Yes, Trading
Yeah,
View.
I've,
It's a
I've heard of TradingView.
yeah,
I've used
yeah,
it before. Yeah, it's good.
yeah. It's an amazing platform. It's free, although there's a lot of ads there, but it's fine. You can use it.
Yeah, they
You
need
can
to
use
make
it. You don't
money,
have to pay.
right?
Yeah, yeah,
Yes.
definitely. So
Yeah.
what you can do with trading platform is that you can do both fundamental and also technical analysis on one platform, and it's web based. sync together with the app as well once you have done your analysis online. And you can access any stocks, international stocks, or even Malaysian stocks on TradingView. And it has a summary as well. So if you are not sure what stocks to buy, there's an indicator. All these indicator like Fibonacci, all these things, Bollinger Bands and stuff, all these weird names. So the indicator would actually indicate whether or not it's the right time to buy or to sell a certain stock. But for stocks, you can only buy, you can't sell unless you already have gotten the stocks. But for Forex, you can either sell or you can either buy. So it's also amazing as well if you were to trade Forex, because it goes both ways. If the market is going down, you can sell, you'll make money out of it. If the market is going up, you can buy, you also made some money out of it. So yeah, that's basically what I do for investment. Unit trusts, funding societies, Stashaway, and also stock investment. And for stock investment, if I were to add a little bit more, I'm also looking at stocks that because I'm looking to invest on a long term. So I'm looking at dividend paying stocks, and there's actually a lot of dividend paying stocks that is undervalued or not as expensive as like Nestle, for example. Nestle is
You
quite
watched our previous episode, right? We
Yeah.
talk about Nestle, right? Okay, cool, yeah. Share with us what is in your radar, right? By the way, this is for entertainment only. We're not investors. So yes,
Of
what
course,
is in
of
your
course.
radar? What are you looking at?
Well, right now I'm just looking at the banks, and one of it is actually Maybank. I did one analysis last week, and just looking at it, technically on the chart, it looks like it has already gone through the support zone and it's retracing. But I'm thinking that the stock prices will go down, maybe as low as the prices that it was in 2009. So let's see. But don't buy first, because there's a potential that it's going to go down some more.
Of course, but there's also a potential that it will not go down.
Yes,
right?
true.
So yeah, I'm curious. Do you use like discounted cash flow model, or do you use like PE ratios when you're looking at this kind of very established businesses? Like when I look at Maybank, right, I don't see much room for growth. I just kind of I see it as there being there, it will stay there, and that's kind of where it is. So for companies like that, usually if I'm super lazy to do DCF, I'll just look at the PE.
Yeah,
right.
true.
So is that kind
You're
of where you do it?
Yes, I would only look at certain things, and one of it is PE ratio. Like for certain companies, I also follow this one guy from Singapore, Sean Sia, I think.
Sean. Okay.
Yeah, Sean. He, I think last 2 weeks he shared in his YouTube channel 20 stocks that he is eyeing at, and he only look at the PE ratio. But he has his own strategy and he has his own requirements. So I guess different people, different requirement. But yeah, PE ratio is one of the things that I would look at. And of course, the balance sheet, income statement, and so on.
Yeah, we can do like a whole day series just to talk about every single element, why you look at what you do, why you use which indicator at what point, right? So tons to talk about. Amazing.
Maybe we'll do that one day.
Maybe we'll do that one day, right? We'll run a full day live show, and then we'll get everybody to come in each hour and talk about different things, right?
Yeah, exactly. I mean, that's basically the foundation of stock investment, right? You got to look at the fundamentals. You have to look at the company's growth, OPEX, all the expenses and so on, PE ratio.
Definitely.
And it's also like value investing teaches us the same thing. It's not much different. It's just that it's a different trading style. Option trading, also stock trading, stock investment, or stock trading, whichever suits your personality.
Cool.
Yeah. So we actually have a few questions. And for those people who are actually watching, I'm trying actually a different method right now, which is why we're not actually seeing your comments as fast as we normally do. So sorry about that. But the first one here. So the question is, is that class that you were referring to still available? And are you able to share who that mentor is?
Which class? Baby Pips?
Definitely go to
Or-
baby Pips, but yes, the other
So
one.
I think it's the thing that you paid $300 for to
Okay.
get yourself a mentor and all that.
Yes, it's still available. His name is Alan T, and if I'm not mistaken, maybe his fee has increased a little bit, probably about 400 to 500 ringgit. But I'm pretty sure it's one of the lowest as well. I'm not too sure how long it's going to take this time around. But when I first started, because I was the first batch, it was 8 days, but only for 2 hours every single night from 8 p.m. to 10 p.m. So if you're working and if you're doing it part time, it's definitely for you. And he studies under this guy called his name is MK. I don't remember his real name. Khalid Hamid, if I'm not mistaken. So I would definitely recommend.
Okay, and that was Alan T, right? How do you spell his last name?
Yes.
T-E?
Thee.
T-H-E-E.
Yep.
T-H-E-A.
And he has a class, upcoming class, if I'm not mistaken, on the 20th of April onwards. So the class is still open because it's online. So there's no limit to how many students he could teach.
He never do the scarcity sales strategy. 2 days more. We have only 5 slots. Then suddenly you go inside. What? There are 50 people here. Where's the 5 slots? That's okay. Yes. I'm very allergic to this kind of selling process, as you can tell. But yes. Cool.
All right.
Thanks for sharing.
Second question here. So from Jason, hey guys, a question. Even with this high volatility and high uncertainty, are you still actively investing in the market? So I guess, I don't think we really had a chance to talk about the difference between trading and investing just yet. So why don't we actually cover that first before we answer this question? Because I think terminology really helps, and I don't really know what exactly he's referring to until we clarify these terms. So Nick, if you don't mind just sharing, what are your thoughts between the difference between trading and investing?
So for me, trading is basically to hold a position for a very short time. Not very short time, but a shorter time than than investing it. So I would say maybe for like Forex, a couple of hours or a couple of days. But for stocks, it could vary from a couple of weeks to only a couple of months. That's what trading is for me. And of course, when you trade, you also need to know what kind of trader are you. Are you a scalper? Are you a intra trader? It depends, because some people, if they're a scalper, they would trade like every single minute, But for me, I only trade at least once a week. That's enough for me. And I only hold position for only a couple of days, maximum probably 3 days, and then I'll close before the weekends. And investment, I would say, is a longer term. Investing is basically an approach that works on buy and hold principle, and basically investor like you, me, and all of us, we invest our money for some years or even longer period. So also it depends on what kind of investor are you. Maybe, and it also depends on what market you are investing in. For like example, unit trust, the minimum that you would want to invest is maybe 3 to 5 years to see some profits. But if you are looking into retiring with all this investment money, maybe you can look at EPF, for example, because it's a retirement scheme program for a long-term investor. Yep. So that is basically me. But if you guys have anything to add, please do add on.
Rajiv?
If I miss anything.
I agree. Nothing to add.
Perfect. Yeah.
But
yeah, the difference there is trading is much shorter period of time, within a week almost, I guess in most people's opinions, whereas investing, you're looking at a much longer time frame. And I guess if you're like a value investor, you're almost one of those buy and hold and never really sell it until who knows what day, right? That said, let's go back to this question. Even with this high volatility and high uncertainty, are you guys actively investing in the market? So Nick, are you currently investing in the market, or are you primarily spending your time trading?
So right now I'm primarily oh my god, my English. I mainly trade for forex because it really helps with the high volatilities, and you can't go wrong with forex trading because when the market goes up, you buy and then you take some profit. If the market goes down, then you just sell and you still make money out of it. But I don't actively invest right now. But what I'm doing right now is actually to have to actively looking for stocks to invest in when the market is doing better. I think that it could take a couple more months, at least maybe 6 months to maybe a year, depending on the situation right now, right? Before I actually buy any stocks right now.
Perfect.
But you know what? It's the best time to learn about investment, even though the market is crashing right now, because there's opportunity everywhere, even with the market condition.
Yeah. Reggie, are you? I mean, I guess just in case the person does
Just
not
in
know.
case it's your first time here, you've not heard us, you came here because Nick is here. So I'm actively vested. I'm not actively investing, right? So I'm not like buying and selling, but I'm not a trader. I hold long term. So I think I am already somewhere like a 70-80% vested, right? So I'm not a big proponent of the stock market crashing further, right? So I did a whole podcast about it. You can check out the podcast. And my
Shameless plug.
#shameless plug. I think it was one of the latest episodes, by the way. So yes, check out the podcast. I share with you some reasons why I don't think there will be a further stock market crash. And I think I come from the basis of we need to understand why there were the previous few crashes, right? So the closest one was the financial system essentially broke down, the '08 financial crisis, right? So if the whole world runs on the financial system and the financial system broke down, the banks went bankrupt, and that only fell to about 50%, right? So I think if that is like a 50% drop compared to where we are today, I honestly don't think it will go down to a 50%. Of course, I'm banging on a lot of stimulus packages coming in, loans forgiveness, a lot of stuff. So there will not be like a big debt crisis per se, right? But as things go along, it may spiral into more complications with this virus, and then other countries, like the US now is very noisy, right? It's the loudest, but doesn't mean it's the most painful. There are a lot of other countries that are struggling and they're not able to handle the situation. Countries like India, countries like Brazil, they're all growth engines in a lot of ETFs, in a lot of different kind of funds. So I think that's something we gotta be very real about, But all that being said, I'm definitely long term, and I think there are very good opportunities at this point in time. Some companies are just so cheap, in my view, they are just so cheap. I just need to, at this point in time, I just need to make sure two things. I need to make sure that the company doesn't go bust, right? So I need to make sure that the cash position and the debt position is balanced, right? That means there are a lot more cash than they have debt, or if any case, they need to be in a very good credit position, right? So how I measure is that I'm giving you like an outright secret. How I measure is the long-term debt needs to be at best 5 times the free cash flow. At best 5 times the free cash flow. That means in 5 years, given the business operating on normal, they can pay down all their long-term debt. I think that's extremely important, right? Because if they don't do that, then at this point in time, it makes a very big question mark as to whether they can survive, which is like AirAsia, which is like all the kind of airlines. They're all struggling because they're all debt heavy, right? So all that being said, I think it's very important to stay vested, because in the long term, it will ultimately come back. And yeah, I believe in human progress. So yes, yeah.
Nice. And I guess quickly for myself, I am almost the opposite. So I'm probably 20 to 30% invested, sitting on another 70 to 80 in cash. I think for me, it's just like I'm just super picky on like the prices I'm going for. Even though I'm like, yeah, I can buy it now, but like I want that I want to get it cheaper, right? And that's, we'll see if I come back and like it haunts me or if it works out for me. Well, it's only time will tell, right? But yeah, it seems like all of us are kind of doing our own thing. I think just going back to Jason's question, there are definitely opportunities if you are familiar with what you're looking for. But that's really the key thing, right? Like you have to be familiar with what you're looking for. You should, and my advice in general for everyone is they should not be putting in a lot of money into something if they have not actually created or gone through some sort of, or if they're not confident in what they're doing and can back it up based off like a fundamental or thesis that they have. Anyway, so let's move back onto this topic here. So I just kind of mentioned the whole idea of like having some sort of thesis, making sure having a thesis is really built off of having some sort of investment knowledge, right? So Nick, how did you feel like, or at what point did you feel like you had the knowledge to actually make a judgment call, whether it's for trading, or whether it's like you mentioned like how you read a bunch of different things about all these different platforms. Like, how did you feel like at what point did you feel like you had enough information?
I honestly still feel that I don't have enough information because there's like so many things to learn, guys. I can only read so much, but only until I go into the market, then only I'll experience myself whether or not my judgment was actually correct. I mean, that's for me. The reason why I read so much and I try to learn as much as I can is so that I could minimize some risk when I actually invest or when I actually trade, because at least I have a base and I actually understand the whole topic before putting some money into it. It honestly took me about 2 years to really start investing because I was really scared. I'm not too sure about you guys. Maybe you guys were more confident than I was. But it took me forever to just start saving up some money and really put in some money into all these investment platforms. Because we don't know, right? One person can say, oh, funding societies is really good, but the other person may say that, oh, it's actually not good. Or even Stashaway, when the market crashed, it wasn't doing very well, but people still put money in it because they actually believe in Stashaway and also the performance. So I would say it depends on yourself, on your risk appetite as well, how much you're willing to risk, how much you're willing to invest. But for me personally, it took me 2 years, honestly speaking.
Yeah, for me, so I've had a lot of, I've been exposed to the stock market ever since I was young, right? But that definitely did not mean I knew what I was doing when I first started. And I think based off those two separate moments in university where I essentially lost all my money, I think that's also one of the reasons why I'm a lot more cautious now, right? Because I like what you're saying, right? Like I also don't know what I don't know, and that's why I'm always trying to read more and figuring out what other information can actually help me take those next steps with more confidence. So we actually have one more comment here from Sean. Try setting low ball offers, might catch some goodies. I have actually set a few low ball offers. I think they're just a little too low at this moment.
That is low blow offer, not low ball offer. But yes, I did catch some stuff using that strategy. Yeah, some people are just trying to just dump things off. So yeah, but it's not what do you call it? It's a little bit like a lottery. It's not repeatable. Yeah, it's not repeatable. It's not as.
Yeah. I actually, what I should have done for some of these companies is I should have put a really high ball sell price, because there was just moments like after hours and all that. Some of these stocks like or there's for some reason someone decides to like buy or sell a bunch of it, and maybe just institutional investors trying to get rid of their lot. And I was like, oh, I really should have I just put those selling prices now. Like essentially my ideal sell price in a year or two's time. Just put it in now, and if I can get it like closed now, then all the better, right? But something for me to do maybe tonight.
Strategy. Oh, yes. Well, for entertainment only, by the way, just saying. Yes.
Just entertainment.
Yes. Don't take it as advice. See for yourself. Yeah. See, I'm very conscious about that. Okay. Now you've trained me very well. Okay, cool.
Yeah. So this is also something I feel like people tend to ignore when things are going well, but I even in this scenario, I feel like people don't fully understand it, and that's the whole idea of managing risk, right? And when I say managing risk, like the phrase I'm thinking about is big risk, or you have to take big risks in order to get big returns, right? Or that is somehow correlated. So personally, I don't believe in that. But what are your thoughts in that space, Nick?
Big risk, big reward, you say?
Yeah.
It's true. At the same time, big risk, big losses as well. But for me, when I talk about risk, I would say, because I'm it's not that what is that word? I can't recall it now. It's not that I'm cheapskate. It's just that I'm really conscious about my money, and where I put it.
I'm not cheapskate. I just scour the internet to find all the free resources, and I'm here to share with all of you. So that is amazing. That's great. Yes, continue.
But when you say managing risk, right? Okay, I'm just going to give you an example. When I trade forex, I started really, really small. I only started with only $100. It's honestly nothing, but I wanted to train myself, because when you trade and when you invest, you deal with a lot of emotion, and that's what you also need to tackle. And I wanted to have like more screen time before I put more money in it. So I wanted to train my eyes and train my my knowledge to see if my analysis is actually valid or invalid. Some, like 2 weeks ago, all of my analysis was invalid because of all the news that have been circulating around. So even though I'm really good at technical analysis, but fundamental analysis also will affect your technical analysis. So when I trade, and I have a rule that if I were to lose 5% to 10% of my capital, I will stop trading for the whole week and then start over to the next week to get a better perspective, to get I don't know, better trade or something. But that's me. So even with stocks as well, let's say I wanted to buy this stock for this price, 5 ringgit per stock, for example, right? And then I bought it, I hold it for 2 years maybe, and then now with all the situation, the stock is going down. So I set for myself, I don't know about you guys, but for me, I would set, if I were to lose 10% of how much that I've invested, I'm going to go out. And then I'll reinvest again when the market is going up. At least I have some profit and I'm not losing that much. So I'm only losing like 10%. That's my risk appetite. I can only do 10% maximum. But it depends on you guys. But this is one of the most important topic that I learned, especially from my mentor, because you don't really get these things from free resources. They tell you things, but you need to hear it from someone that is really experienced, right? This guy that I learned from, I think he lost about $20,000 or something. And then he invented this strategy that, okay, if I were to lose more than this percentage, then I'm going to stop and then I'll relook at it after that. And it has helped me tremendously when I trade, because if you can't even manage like $100 of your capital, you can't manage 1,000 US dollar. You can't manage like more capital. So you need to start small just to train. Although it's really exciting, you know, I want to put more money. I want to buy this stock. I want to do this, do that. But you really have to manage your emotion. So for me, one of my rule is that before I enter a trade or before I invest in anything, I would be emotionally prepared to whatever outcome that it may be. So basically, hypothetically, I would accept whatever loss, even though it's not, I'm not losing anything yet. But, you know, to train your brain to that emotional setting, that really helps. At least that's what I think.
Cool. I agree with that. And let me chime in a little bit on risk. Right. So like what Chang said about high risk, high return, right? I don't believe in that. To me, I see it as high risk, high uncertainty, right? It's if I don't know something, it's very risky, right? If I'm unclear on what's going on, then it's very risky. It doesn't have direct correlation with the returns. You know, it's a lot more about how clear I am on the situation, right? So it's like at this point in time, a lot of it's like the bond market is one thing that a lot of people don't talk about, and a lot of triple B bonds or even like junk bond status are corporate bonds, right? So if you're not familiar with the market, you will find that this place is very risky because it's very uncertain. A lot of things is just messy, right? But if you actually understand what's going on, you realize that you can sieve out all the goodies, right? You know what works, what don't work, and you just kind of sieve them out, right? So when I look at it, there is no correlation between risk and returns. It's a lot more about volatility and a lot more about uncertainty, right? There's no direct correlation that way. It's just kind of like a marketing ploy. It's like the sky is blue. People tell you some super logical thing, right? And then it becomes like, oh, the sky is blue, duh. Right. But you know, to me it doesn't work that way, right? It's a lot more about volatility and uncertainty. So I only want to be in spaces that I understand what's going on, right? It's like if you tell a Malaysian to invest in Malaysia's property, right, they will either tell you it's a bad market or they will tell you, you know, it's a good time to enter or whatever. They will not tell you, oh, they're not familiar, because they are in the thing. But if you tell someone to invest in a Brazilian property or they totally have no clue what's going on there, to me that's extremely risky, right? So that's the same idea. You only want to be in places that you understand, right? And don't FOMO, don't worry, right? You got a long lifetime to go. Just take your time, learn, and just kind of grow as you go along.
Yeah, I think there is also a very different thing, or when it comes to trading and investing, right? So as an investor, you know, first for me personally, like I would actually love to see the stocks that I own continue dropping, right? Because like I said, I'm only 20% invested. Like I'm waiting for these stocks to drop further for me to load up, right?
I don't want that to happen. But yeah,
continue. 20%, you're still good.
yes.
Yeah, but because, you know, if going back to what Reggie was saying, if you know your company, if you know its prospects, then you know that whatever price it is set at may or may not be actually what it's worth, right? And if you're confident in that, then you're able to actually say, I actually want it to go down further and I'm going to pick up even more because I know what I'm doing, right? But Nick, I think one of the things that you didn't really mention is you also look at a lot of technicals, right? So you're trying to stack as much of that probability to your side, right? So it's not necessarily like you're taking a 50-50 gamble every single time, but you're taking smart gambles per se, right? Where the odds are more likely in your favor. Of course, not every single one's going to work out, and to have an exit strategy is very, very important as a trader. So to have like, you know, just the idea of like, okay, 5-10%, I'm done for the week. I think that's actually really smart, and this from the perspective of then you have a chance to calm down. You have a chance to reanalyze what happened, and you're not trying to go into your next trade seeking revenge, right? When the odds aren't actually in your favor at that point. Those are just my 2 cents on that topic. We actually have another question. It seems like it's a busy question day here. So Syed mentioned or asks, any tips or advice for beginners to start investing? Go for it. You got anything?
This is actually one of the questions that I get a lot from my friends as well. I would say first is you need to set the right goals and expectations. Don't take it from me, because my goal was to make money fast. And my expectation is that if I were to learn Forex, I'll make a lot of money within 3 to 6 months. That definitely didn't happen. I studied Forex for about a year, only made money, a year and a half later. So you really need to set the right goals and expectation. So I learned that after a year of learning and also making losses. So what I did was to set clear goals, at least for the next 5 years. And one of my big goals is actually to be financially free within 5 years' time. And after that, you need to divide your goals into small goals, like yearly goals and also monthly goals. What do you want to do? Like for me right now, my 3 months goal, my quarterly goal is actually to double my Forex account. And it looks like it's going to be achieved sometime soon. So that's the first thing. The second thing is that I would advise you to learn a lot, read a lot. Start by investing in yourself first before you actually start investing in the market. This is for the reason of equipping yourself with the right knowledge. And for me, what I would advise is to never put your money into something that you don't understand. Before I actually started, I read a lot. I studied so much just to understand one thing. And of course, I wanted to diversify my portfolio as well. That's why I went into Forex. I went into investment into a couple of other things like stocks, peer-to-peer funding, and so on. But really learn a lot and read a lot. There's so many free materials out there, guys. One is Baby Pips. And if you know any of the trading guru or investment guru, there's so many free content, free materials. It's just that it scatters around in the internet. You just need to find one good blog and then you're like done. But don't just stop there. You also need to, compare with other gurus as well, because they might have different opinions. And also, the third thing that I would suggest is to find an accountability group. Basically, a group of people who shares the same goals. This is basically optional, but it really helped me when I actually first started my journey. I had 2 other friends, a very close friend of mine, who shares the same goal, who shares the same mission, and we talk about money a lot. Of course, we talk about other things as well, but it really helps that all of us shares the same mission and the same goal. So we kept each other accountable, and we had like mini quests or mini tasks basically, and we did the baby pips course together. Of course, I was like the last one to finish it, but we basically kept each other accountable, and we talked a lot about money. We discussed a lot. Each of us would research on different things, and then we'll meet about once a month. That's enough to discuss about what we have found, what are the opportunities out there. That's how we actually found all these other alternatives besides the normal ones that people hear about. So that's basically 3 things that I would suggest on where to start as a beginner. Is there anything else that you guys want to add? Maybe for you guys it's different.
I would echo all that. A lot of it's just investing in yourself, learning the content, and that's going to take time, right? But I think one thing that you actually should learn is how you're actually going to deal with your emotions when you're actually invested. And to do that, I actually suggest using something like a Stashaway, like a robo-advisor, where it kind of takes care of everything for you, and you're kind of invested. It's a very, very good option for most people. But then as the market goes up, as the market goes down, because you're already now invested in Stashaway, you are able to actually like notice these emotions and know how to deal with it, right? And I think that's a great way to still get that like emotional experience of being invested, but then making sure you're also building up the right skill set and the right knowledge to actually take it yourself in the future. So we are actually like at the top of the hour. So we have 2 more questions or comments that we just wanted to quickly address. And then Nick, if you don't mind giving us some last words. First question here is, do you guys stick to a risk-reward ratio to manage your risk and preserve capital?
Okay, well, for me, I do stick to a strict risk-reward ratio. Like super strict. My risk-reward ratio is basically 1:2. That's it. I don't want to be too greedy because I've been greedy before. It didn't turn out well. But the maximum that I did was, okay, so basically there's actually a trick to your risk-reward ratio, which I learned also from my mentor. I used to stick to 1:2 ratio, and then I maximize it to 1:3, but never risk more than 1% of your capital. That's me. Because if you were to lose like 5 trade, right, you would only lose 5%, because every single trade you are only risking 1%, and you just need like 2 or 3 good trades to cover all of the risk that you have lost. So for me, I do stick to a strict risk-reward ratio. At the same time, if I could like maximize my reward, I would do it. But it takes time because you need to actively monitor your trade. Which means, so for example, like for Forex, if I were to go long or buy USD CAD, for example, I'll put my stop loss there, and then I'll actively monitor the way the chart goes. And if it goes up and then retrace a little bit, then I'll adjust my stop loss to at least break even. And if it goes up again, then that's okay. I'll just adjust my take profit, and maybe I could profit, more than just 1:3. Yeah, but that's me. And it's honestly, it really helps if you have a very strict risk-reward ratio, just to manage your capital. And this requires discipline. At the same time, it also requires you to manage your emotion as well. That's me.
So
Okay.
I don't trade, so I don't have like a strict risk-reward ratio, but I have something that I want to share. It's more like a capital allocation for an investor's viewpoint. So a lot of people talk about when to buy, but a lot of people don't talk about when to sell, right? So that is something that is very important when I look at investing and capital allocation. So when I look at it, it cannot be just on the companies that I own. I need to look at a broad market, right? So a lot of times the question is, if I'm only allowed to choose 30 companies. So following 30 companies is crazy already, right? You really got to know all the industries, you got to know what's going on, and you really got to know your work, right? So if you are new, start with 10 companies as an investor. Okay, start with like a broad-based ETF. That would save you a lot of hassle, and then pick your stocks if you want to pick your stocks. So if you have I have a very strict rule of 30 companies max. And if I see something interesting, then it becomes like a wrestling match. Who do I want to sell to buy the other thing? Right? So then that is like a whole discussion we can do another time. Yeah. So that's kind of where I stand.
Nice. And the last question here. Anyone know anything about this company? I don't know. Hartalaga?
I think the one that went on the news, the one that made the gloves and the PM was talking about it. Was it that one?
Isn't that Top Growth? I have no idea, so I'm not going to comment here.
Okay,
Yeah.
so I don't think
Not
any of
too
us
sure.
know this company, so we can't actually leave or make any comments about that.
Yeah.
So now that we've taken care of those all those questions, Nick, thanks so much for joining us today. Really loved learning about this School of Pipsology.
It's the best.
Yeah, I'll definitely have to check it out.
Yeah.
But if I know you're also working on a few different things to help I guess primarily the Malaysian market here. If you don't mind just sharing with us what you're planning to do, and then we can wrap it up.
Sure. I'm actually trying to organize a free knowledge sharing session. It's going to be sometime soon. I haven't scheduled it yet, but it's going to be sometime this week, probably during the weekends. It's going to be an hour sharing session. I'll be speaking about where do I start, investment trading opportunities in Malaysia, tools and platforms that you can use, stock investment trading as well, even forex trading, and also all the free resources that you can get to get started. So if anyone is interested, feel free to drop me a DM or comment in this live video. I'll get in touch with you and send you an invite as well. It's free. That's the most important thing, because I wanted to give back to the society, because I know how much people would want to start, but then they don't know where to start, and they probably don't have a lot of money to invest in all these courses, which can be really, really expensive.
Nice.
Cool.
Okay. Thank you so much, Nick, for joining us today.
Thanks so much for having me, guys.
For sure. And thanks everyone for tuning in. So tomorrow we will try 8 p.m. again, and we're actually going to change up the topic, and we're going to actually have a HR professional come in to talk more about resumes and interviews and all that good stuff to make sure you put your best foot forward. So make sure you tune in for that one, because it'll be a lot of fun.
Amazing.
Yeah. Okay. All right. Till then, take care.
See ya.